Hello everyone, welcome back once again. In today's lesson, I will share essential tips and rules to make smart money trading strategy work for you. I know you might be struggling trying to understand smart money concepts, trying to put every concept together to make it work. In today's lesson, this is exactly what I'm going to provide for you. If you are serious about mastering this concept, stay tuned. This lesson will be a game changer. Let's dive in and unlock the secrets to trading success. Now, if you want to trade with smart money concepts, you need to understand a lot of concepts. As a matter of fact, I've taken my time to break down each and every one of the concepts you need to be successful trading smart money strategy. And in today's lesson, I'm actually going to make those complex lessons and those complex concepts into a breakdown lesson. Okay, so that's why I decided to list some of the rules we have right here, which is going to make it very easy. Now, this is a quick sketch, and this sketch right here will equally help during the breakdown. The very first rule under the major rules for smart money concept is that price breaks structure or causes a change of character. And this is very, very important in smart money trading. If you want to understand how smart money trading works, you need to understand what break of structure means and what a market structure shift means. So if you're trying to trade smart money concepts and you visit the price chart, you're going to see movements like this. If you try to understand what price is doing, this is simply a break of structure, which means that price is taking the highs right now. So in any case you see price taking the highs, breaking above highs, this means that price is bullish. And if you see the reverse, it means that price is bearish. And if in any case you see price breaking underneath the lows, instead of taking the highs of the bullish movement, this is what we call a shift in market structure. And in any case, if price continues bearish, taking the lows, this is what we call a continuation, that is breaks of structure to the downside, right? So this is what market structure means. In a case where you see break of structure or a market structure shift, it's valid and you need to pay attention to that. And if you're still struggling, take your time, watch this part. When we get to the price charts, I'll break it down and it's going to be a little bit simpler. Now, another thing is OB must remain unmitigated. Now, one thing we know is that order blocks and supply and demand zones are created after we have impulsive moves out of a range or out of a pullback area. And if you look, the last two lessons I dropped, it's going to help. Now, another thing you have to understand is these lows we have around these areas, they probably have order blocks, right? This lows has order blocks, but the most important thing is selecting the valid one. And one of the ways you're going to identify a valid order block is when you identify that the order block is not mitigated, which means that price is yet to mitigate the order block. And what is mitigation? Mitigation is simply when price returns to area of order block for reduction of risk. So let's imagine that this is our order block right here, and you see price is here to mitigate the order block. Mitigation simply means price pulling back to the order block. So since price is here to pull back to this order block, it remains unmitigated. So the order block is valid and we can go ahead and trade it. Very, very important. And another thing that makes the order block valid is it breaks structure. So that's why I said you need to pay attention to break of structures. Another important rule we have under the major rules for SMC is presence of imbalance, and imbalance needs to be present. Another thing you need to notice, when we have this impulsive move that breaks structure, we usually anticipate that price leaves imbalance, which we call inefficiency between buyers and sellers. It means we only had one player at that particular price range, right? So at this particular price range, we're going to see a bullish imbalance because price is going to leave some inefficiencies, or we call it fair value gaps, around here. If you're still struggling, the price charts will do the justice. Now, looking at the major rules again, liquidity sweep increases the probability. Now, if price goes ahead, builds liquidity, either it sweeps liquidity before the order block is created, or it creates liquidity above the order block. Either of them, it's valid. It increases the probability of the zone. Now, let's try to do some explanation using the quick sketch we have right here. The very first thing we have is a break of structure. So price needs to break structure of the previous high. Now, let's assume and that this was the previous high which pulled back to form this low. So while price is reacting to the upside, it needs to break the previous high. If price fails to take the previous high, then it doesn't meet the criteria. All this we have right here is the criteria that should be met for you to make SMC work in your favor, right? Now, break of structures can be of many types, because we've seen scenarios where price takes the high before building some inefficiency, just like what we have right here. You see this impulsive move right here broke above this particular high before price built this liquidity inducement area, because definitely there is an inducement area which will at some point turn to liquidity area. And in some cases we see something different, where we have something like this, where price builds this inducement area before the break of structure. So this is another scenario. In this particular case, you see price builds this inducement before the break of structure. So either way, if you see the first one, it's valid. If you see the second, it's also valid. Another promise, if you're struggling to understand this, I'm going to show you on the price chart. Now, another important thing is OB must be unmitigated. Now, you see this particular inducement area didn't mitigate the OB. In a case where we see this move tapping into the other block, it means that this other block has been mitigated and there is no need trying to trade from here. But in a case where we have something like this, inefficiency, and the level not being mitigated is valid. Just like we said on the third point, that the presence of imbalance is also valid. Now you see we have an inefficiency around here, and imbalance, like I said, is the inefficiency between buyers and sellers, where I said we have only one player at that particular point. Now in this case, you see we only had one player. That's why you see this space right here, because we only had buyers pushing price to the upside. Now liquidity sweep is valid and it decreases the probability. Now in a case where we see price returning back to the point of interest, now this is a build of liquidity. So if price sweeps the liquidity before reacting to the specified direction, then it's valid and we can go ahead and consider that. Another important thing you need to note is that if price sweeps liquidity before the reaction, so in a case where we have liquidity resting around here, if price takes it before reacting to the upside, it increases the probability as well. Now here are key tips you need for this strategy to work for you. Now the most important thing you have to note is more effective in directional markets. It means that this particular strategy is very effective in a directional market. If the market is trending, it works perfectly, but it has no probability of playing out in a ranging market. Performs better during high volatility. Exactly, it performs better when the market is very volatile. Focus on recent valid order blocks. Another thing you have to note right here is valid, because if you try to focus only on the recent order blocks, believe me, you're going to make mistakes during your order block selection. Let price clear liquidity before entry. Very similar to the last point we have right here. If price sweeps liquidity before mitigating your zone, very, very important. It has high probability of playing out. Let's see what this looks like on the price chart. Here is the first example on AUD card. This is the 30 minutes time frame. Just like I said, you need to remember all the rules. So I don't know if I should carry the rules over here to make you understand, but I believe you still remember the rules, and I'm going to state them while we look at these examples. Now, the very first thing I said you should note is price has to break structure. You equally made mention that you should focus on the recent OBs, which are not mitigated, not just focusing on the recent order blocks, focusing on the valid ones. We said price should live in balance as well, and liquidity sweep increase the probability. Now take a look at the price action we have right here. You're going to notice it has all this. Now I equally said that this particular strategy works in a trending market. Now taking a look at the current price action we have over here, this is the current price, and if you try to look, this is a trending market. Price is reacting to the upside. If you want to argue, let's do some markings. You see with our trend line, it has confirmed that price is in an uptrend. But without using trend lines, you can go ahead and read the structure of the market again, because if you mark this particular high, you see price broke the most recent high, which means that price is bullish. In another case, if you try to read it from the internal structure, you're going to agree with me that price is equally bullish around here, because price broke structure right here. You equally have another break of structure right here, which means that price is bullish. And in this case, we have multiple other blocks which is valid, but we're going to focus on the most recent one, because I said you should focus on the recent valid other blocks. Now what we need to see firstly is a break of structure, a market structure shift. And what you can clearly see right here is that price broke structure. Another thing I said you should do is you should select an unmitigated zone, which is your unmitigated order block. And order block is the last opposing candle before an institutional move. So where is the last opposing candle? This is your last opposing candle right here. And another important thing I said is inefficiency should be present, which means that price should leave some inefficiency. Now you see this institutional move, we have some inefficiency right here. If I try to zoom in for you to see, you can clearly see that we have some imbalance right here, which makes it valid. I equally said that liquidity sweep increase the probability, and liquidity sweep is also very, very valid. And you can agree with me that we had liquidity resting underneath this lows, price swept to liquidity before this institutional move. Now, another important thing you need to note right here is that price built inducement area before the break of structure. And this is exactly the inducement area right here. This is price building this inducement area because we have an institutional move. It's pulled back, creating this inducement before the continuation that broke structure. So this is a valid inducement area. Now, our trade opportunity is complete right here. And if you go back to our rules, try to follow the rules, you're going to agree with me that we've been able to identify every single thing that is stated in the rules. Now, playing price forward to see what price presents right here. Now, you see price finally come back, sweeps the liquidity, because I said if price sweeps liquidity is also important. Price sweeps the liquidity, mitigates our zone, and we start seeing some kind of reaction. If you continue to play price forward, what do you see? Price starts to move away. And you can agree with me that this is very, very simple. Playing price forward, we have some pullbacks and price continues to the upside. Very simple trading strategy. And you can agree with me that price has currently provided another trade opportunity right here, because if you try to follow the rules and everything we've stated that you need to follow to make smart money concepts work in your favor, you're going to agree with me that we have another trade opportunity right here. This lesson, I'm not here to waste any time. Let's quickly go to the next example. And the next example is actually going to make it even more clear. But before that, let me introduce our mentorship. Our advanced smart money mentorship is still running. This mentorship has been running for over 2 years, and we've succeeded in building a lot of successful traders in our community. This particular mentorship costs just $216. And note, this is just a discount price. Here is what you get when you join our mentorship. You have access to advanced smart money course, which is going to help you understand everything about smart money strategy. You're going to join our weekly chart breakdown, where we try to break price actions down, which is going to help you understand smart money concepts even more. VIP support community. We have a VIP group where we support traders who are struggling. We have experienced traders who are advanced, who are going to help you out, and you're going to have access to our premium possible setups where we share the trade opportunities we see, and you're going to be part of our weekly Zoom meetings, right? So phone enroll, go ahead and pay now. And if you need some other things to convince you, you can navigate around, check out the reviews, and try to see more, to read more about our mentorship. Back to the lesson. This is AEDJPY, and we're going to use it for the second example. And I believe you remember all the rules. The rule states that we should trade this particular strategy in a trending market. Now take a look at what the 30 minutes time frame is saying. Price is bullish here on the 30 minutes time frame. Another thing you have to understand is this particular lesson is just a one time frame lesson. I'm just dropping this particular lesson on a single time frame. But trying to understand what price is doing across different time frames is very, very important. That's why you need to check out our last lesson where I talked about multi-time frame structure, talking about how to combine different structures to identify trade opportunities. Because if the higher time frame is actually against this directional bias on the 30 minutes time frame, believe me, it's going to be a failed setup. So you have to pay attention to that. This particular lesson, I'm only focusing on lower time frame, which is the 30 minutes time frame. Now, the very first rule says we should identify a break of structure, and if you can see price is trending, if you want to read the structure based on what we've seen in the internal side, is a valid break of structure, which means price is bullish. A valid break right here again, and you can agree with me that this is another valid break of structure. Price is bullish. We had this move. Here is the pullback. This is the most recent break of structure right here. And if you agree with me, price closed above this high. So it's a valid break of structure, even though we had multiple weeks above this high. Now, Another important thing we talked about is selecting a valid order block. Now, selecting this order block, is it valid? Yes, it's valid, but currently is not a high probability order block because it doesn't meet all the criteria. Yeah, some people might actually try to mark this area as the liquidity inducement area. If you do that, you are not totally wrong, but this is a good zone. All we need to do is let some price actions play out, which is going to make it valid. And another important thing that makes it a valid zone, even though it's not yet a high probability zone, is that there is no inefficiency underneath this zone, which price will be going into the balance. So this explains that price will only be focusing on this particular zone because this is the most recent zone and the most recent valid order block, right? Now, another important thing we talked about after marking the break of structure is selecting a valid order block. And as we said, imbalance should be present. And you see we have a lot of inefficiencies right here. We already explained what inefficiency means. Another important thing we need to note is we need to get our entry after price sweeps liquidity, because liquidity sweep increase the probability, just like I stated during the lesson. Now, playing price forward to see if price is going to build some liquidity, which is going to make it valid and high probability. Now, this is exactly what you see right here. Remember the very first example we treated, you see price builds liquidity inducement area before it broke structure. But in this particular one, price broke the structure first before coming back to build this liquidity area. And this is one thing you need to accept. Price will always build liquidity above valid points of interest. Now, this liquidity build right here makes this a high probability zone. And if you want to trade from this zone, believe me, it's a high probability one at this particular point. Getting your entry will be very nice. And we have different entry methods. If you're really interested in learning entries, I have a couple of lessons on entry on this channel. I'm only focusing on making smart money concepts work for you. And this is why I'm showing you this simple strategy with the tips and the major elements you need to make it work, right? So this is a liquidity build above the point of interest, which finally makes it valid. Now, you see, wait for price to return back to this particular point of interest. And finally, price comes, sweeps the liquidity, builds more liquidity, sweeps it again. And finally, we have the reaction out from the zone, and price starts to react to the upside. And what I'm currently using for these examples are recent price action. As a matter of fact, these price actions are today's price action. You can go to the price charts. This lesson will be released on the 9th of August. So you can go to the price charts and try to see what price did on the 8th of August, which is today that I'm recording this video to help you know that these are recent price action. The truth is that I didn't take any of these trades, but I saw them play out in the market. I already had the setups I have on my watch list, so I wasn't paying attention to what price was doing on this lower time frame, but these are valid trade opportunities. If I actually took this trade, believe me, you know how I do it. I will definitely show you what it looks like in our community when I shared the trade opportunity. But anyways, this is a good one, and I believe you've been able to understand the easiest way to trade smart money concepts, making it work in your favor. So thanks very much for watching this particular one. I'm Solomon Wisdom, and here is Born to Trade. If you're new to the channel, consider subscribing to the channel. See you in the next lesson.